Hey, what's up everyone? Welcome into the channel. My name is Brett with Investing on the Go. Today we're continuing our series of living from our brokerage. This is going to be week 22 of 2026, our update. We did do some buys this week. It was really tough to buy into this market with the S&P, the NASDAQ, essentially hitting all-time highs Tuesday, Thursday, Friday. So you're always just buying a little bit more expensive, but we did do a buy. So in this video, we're going to go ahead and cover the market update for the week buy that we did this week, jump into our dividend portfolio. We were able to dollar cost average and bring our cost basis down on a holding. We'll cover that, increase our monthly and yearly income, and then we'll be diving into our Robinhood portfolio to take a look at the dashboard for the last day on Friday and for the weekly performance in comparison to the indexes. So with that said, if you guys are brand new here to the channel, I would really appreciate if you go down below, smash that subscribe, smash that thumbs up. If you guys have any comments or questions at any time, drop them in the comment section below. Question for you guys: did you guys buy anything this week, any stock, ETF? Let me know down in the comment section below, and check out the pinned comment to get some free goodies and join the Discord server. It's completely free. Okay, let's go ahead and jump into our market update. So in terms of Thursday's market update, the US and Iran had not made any negotiations just yet. Iran was launching missiles at Kuwait, Israel was launching missiles at Lebanon. No one had agreed on any specific deal, but once a deal is signed, oil or the Strait of Hormuz is set to reopen over the next 60 days, with Iran beginning to clear some of the mines out. Oil has been dropping. If you've been watching oil or MLPI is a pretty popular covered call ETF within the investor, covered call investors. That one's been kind of dipping these last few weeks as well. And, we're one signature away from a deal. Now, on Friday, when I was recording this video, Trump made an announcement that he will be lifting the naval blockade on Iran, essentially allowing, ships to move freely through there and kind of opening up the oil. Now, if we jump to the markets for the week, look at the last 5 days. Remember, Monday market was closed. So here, this is Friday. Last week, we kind of sold off into Friday, onto close. On Tuesday, we actually opened up from Friday's kind of lows until opening up about 0.6%, and then moved higher into the morning. And then by the mid morning, right, it's 7:38 in the morning, it did kind of sell off a bit and then kind of trail sideways for the remainder of the day. Wednesday, everything just kind of was waiting. Nobody really knew. There was a lot of news out there whether we would be signing a deal or not signing a deal, just every day. Like, we're really close, very close. And then throughout Thursday, Friday, it was looking like something was going to be taking place. And we did see the market move to hit new all-time highs here. Tuesday itself was hitting a market high. It hit an all-time high here on Tuesday at market open. And then on Thursday, cleared another all-time high on Thursday, pushed to a new all-time high here on Friday, and then kind of closed down just a smidge from that all-time high. We're down roughly 0.2%, 0.23% from all-time highs on the SPY. If we take a look at the NASDAQ, we did hit that all-time high here on Friday as well, and then sold off. Again, we're down 0.45%, but essentially the same picture. Whether you're invested into the S&P 500 or the NASDAQ, the movement seems to be the same. And we've had the mid-small cap companies with the IWMI, IWM, also kind of moving throughout this whole period. So not only are the large companies moving positively, but we're seeing the smaller mid-cap companies beginning to move as well. Technology, memory has been, AI pushing the market higher, but we're seeing some movement with software. We saw a big jump in Meta yesterday, a big jump today in Microsoft at 5.45%. So we might have a little bit of a rotation. That is the market update as of now. Now, jumping into our buys, with the S&P and the NASDAQ essentially hitting all-time highs on Tuesday, all-time highs on Thursday, all-time highs on Friday, and closing so high to the all-time high, it was really tough to make a decision with my buys this week. But ultimately, I decided to dollar cost average into IAUI. This is the NEOS Gold High Income ETF. We did do one purchase here, $489.83. I picked up 9 shares at 54.43. I purchased these on the 28th, so that was on Thursday at 12.24. We have here the 28th at 12.24, right in this zone right here. I didn't quite time the bottom. I'm not trying to time the bottom. I'm not trying to time the highs, but I am a bit pulled back from this position. I'm dollar cost averaging into something. If we look at gold itself, it's actually showing some signs of support right around this 43.50 and so it kind of bounced within this. It also hit here back in March 2026. So obviously gold could continue to fall from here lower, reaching these March 2026 lows, or I could just be dollar cost averaging in, which is what I did. I just kind of dollar cost average in. I'd like to bring this position as a whole up to roughly 300 shares, similar to my BTCI position. So if the market does continue to pull back a bit with IAUI gold, then I'll just buy a little bit more up until I get that 300 shares, and then I'll be rotating back into my primary holdings, which are TSPY, TDAC, and IWMI. So if we take a look at our stock journal, there's our position right there, $489.93. Now I do have a little note here on the side that is $3.11 of this is margin, and I'll explain that here in just a moment. Now, jumping into our dividend portfolio and income breakdown, as I said, I did dollar cost average into something that's pulled back a bit. And because of this, I actually lowered my cost basis here. So IAUI was the stock that I picked up on the 28th of May. It was my final buy for May, but we'll be doing our 1 month recap here in the next video. So definitely stay tuned for that. Subscribe, have notifications on, right? So we were at 279, picked up 9 shares. We're at 280. So historically, I'd like to buy, or futuristically, I'd like to buy 20 more shares of IAUI. So if it pulls back a bit, I will be fine kind of averaging into this position. I would like to hold Bitcoin and gold kind of as my satellite positions, as if they do good, then I'll have some recovery in them. But my primary holdings will continue to be the S&P, NASDAQ, and the Russell 2000 ETFs, covered call style ETFs. So here we had our past income be averaged at 81.30. It increased by $2.70 per month to our new monthly income of $84 on that holding. Our old monthly was $44.88. It moved up to $44.90, and our yearly income moved from $52,432 to $52,464. That's a yearly increase of $32.40 for this week's buys. And like I said, I didn't buy a whole lot this week. I'm just kind of waiting. Although I am planning some big stuff here in June, which we'll cover in an upcoming video, where we're going to be diving more into using margin, our safety buffer, our numbers, and the reasoning behind me using margin now versus waiting a bit. So, but definitely stay tuned. We will be making a video on that. So our cost basis on IAUI moved from 57.12 to 57.04. So I'll show you that in Robinhood in just a moment. You take a look at these positions right here. So at 604, so we're at 604.80 and a negative 3.78. So those are our current numbers, right? We're down. Now, if you lower our cost basis here to 57.04, you wouldn't think it'd make a huge difference, but it actually takes it down almost 10 basis points from a little over actually 10 basis points from 3.78 to 3.65. and a net loss of negative 604 to a net loss of only 582. But in reality, we're not really down $582 just yet on this position, because we've been paid out from IAUI $786.67 since we've had this holding, and we're still net positive $204.27 if we take the dividends that we were paid out into account, right? And yeah, so that's just lowering our cost basis in through here, and everything else kind of adjusts up there. But let's go ahead and move into the next area, which will be just diving into the Robinhood live portfolio as a whole. Let's go ahead and do that now. We'll discuss that. Okay, so we are inside our Robinhood dashboard right here. Let me go ahead and zoom in a bit. As of Friday close, our portfolio, I've renamed it margin account. So this is my margin account. It is where I invest into my covered call ETFs. This is my monthly dividend covered call portfolio. It generates upwards of, we take a look at our dividend portfolio, it generates roughly $4,497 of income per month as of now going forward, right? As we're adding more shares, it just continues to snowball and build up. Now it's currently sitting at $364,443.88. I have no cash in this account. So this is my margin account, and I'm going to keep it within margin. How I do this is that every time I'm paid out dividends, I take those dividends and I deposit it directly over into my cash account. By doing this, I keep my margin buffer or my margin used at where I want it to be. So in this case, we can see margin used here is $991.81. So I may have some cash that was deposited into here. I'll have to go take a look here at how this margin is used, because I should be using roughly $1,000 of margin. Whenever I do receive dividends within this account, all I do is head to deposit funds. I'll go ahead and show you the process in through here. And you go ahead and select your accounts. You select your margin account. You select your cash account. And then you go ahead and specifically set in there however many dividends you were paid out. You go ahead and transfer that from your margin account to your cash account. And then it's available in my cash account as cash, where I can pay down my mortgage. I can pay down my car loans. I can pay down my credit card because it's cash. I'm borrowing it, or I'm not borrowing it, but I'm paying out dividends in this account, transferring it to my cash account, and then I could use it there freely. The dividends, as I've seen, is that when dividends are paid into this account, it does pay down the margin that is being used. Kind of the process there. We're going to be going heavier into margin in the future because I'll talk more about that in the future. So definitely stick around, because I do have a plan, and I'll go over the whole process of why I'm moving into margin, how much margin I'll be using, my safety margins, and all that stuff. Okay, so our portfolio on the day, we already kind of covered this during the day. 0.26 on the day, 0.77 after hours. I don't know if that's 100% accurate. We'll go ahead and just say as it is. Our weekly performance for this week alone, we're up 2.37% this week, or roughly $88,439. And a lot of this comes from the indexes, right? If we take a look at the indexes, let me go ahead and bring in boy charts here. I was already looking at these here, but if we go ahead and take a look at the SPY or the NASDAQ or IWMI, the Russell 2000, we look at the last 5 days and we look at their price. These have all performed really well. The NASDAQ was up 3.3% this week. The Russell 2000 was up 2.65%. And the S&P 500 was up 1.74%. So because my portfolio is split, if we look at the equity between these positions, 108 is in T-SPY, 121,000 is in TDAC, 109 is in IWMI. A lot of this comes from the growth portion, so I didn't invest 121,000. Just due to appreciation, it's sitting at that point. But these are all roughly added about $106,000 a piece before appreciation. So because my portfolio is split, the NASDAQ and the Russell 2000 kind of pulled my portfolio higher this week than the S&P 500. And let's go ahead and drop those, and we'll go ahead and bring in TDAC, T-SPY, IWMI, and we take a look at the 5-day performance. They compare right along with the other ones. So go ahead and just bring all 6 in here, and we'll look at the price, because they're all very similar. In the purple, we have TDAC up 3.54. In the pink, we have QQQ up 3.3. So TDAC outperformed QQQ by 0.24%. In the green here, we have the NEOS Russell 2000. This is 2.66 versus the actual Russell 2000 is 2.65. So outperformance by 0.01. In the orange here, we do have the T-SPY up 2.06. And then we have SPY itself at 1.74. So essentially, all my covered call ETFs outperformed price-wise. This isn't total return. This is just price appreciation. They outperform the indexes that they're the underlying indexes. So they did well. So yeah, I'm keeping up with the indexes here. And obviously there are going to be weeks where I have the X dividend. It pulls the dividend out of my holding. My position drops a bit due to the dividend getting pulled out. But overall, I'm still happy with this movement here. I still do have my retirement accounts that make up, of the stock market. This makes up about 60% of my assets being invested into the market. The other portfolio, my growth side, is roughly 40%. So it's still growing. It may outgrow this portfolio, but we shall see, right? So let's see here. That's our 1 week, and I don't want to cover the monthly just yet. We will be diving into our monthly recap here as well. I think that's all that we're going to be covering in this video. If you guys have any questions, comments over anything that we chatted about in today's video, let me know down in the comment section below. If you guys have ideas for upcoming videos, let me know as well in the comment section. Again, if you purchased anything this week, whether it was a stock, ETF, or some fun item, let me know down in the comment section below. And check out the pinned comment to get some fun goodies as well. Sign up for SoFi, Robinhood, or join the Discord server. It's completely free. And I'll see you guys in the next video. Have a good one. Bye-bye.